All right, good morning, everyone. Today, tell you what, traffic is really picking up out on the roads, and yeah, um, I've got to do basically my morning workup, and that is a matter of plugging in the risk ranges here, and the most notable change in the risk range is going to be on the 10-year that I can see. So the high end of the risk range on the 10-year is now at 2.34, which is significantly higher. And the low end of the risk range on the 10-year is at 2.07, which is also significantly higher. So if we take a look at this on the, this is the daily, and here I'll get rid of some of these trend lines and stuff, get those out of the way. So if you, just by looking at this chart right here, the 10-year is about to see a significant move to the upside here. That's the forecast, and significant move to the upside. On the 10-year, rising rates. That means people are selling bonds. The implications are negative. Rising rates are negative for the broader market. So let's see where we are on the S&P today. I put up the so actually, no, before I go over the risk ranges, actually, let's look at this fib retracement real quick. Let's get, I'll just hide that. I'll keep it, actually. That's where I think that's where a gap is. There we go. Okay, I'm going to adjust those risk ranges. But here, check out the Fibonacci retracement here. So here's the move from January 4th to January 24th on the S&P. And it went right to twice here. It went right to the 61.8 fib right there, and has failed each time. Yesterday was a rather spectacular failure. So let's put up the risk ranges here. New risk ranges are, let's see, the low end on the SPX is 43.75. Okay, it's a little bit higher. So that means somebody's expecting volatility to come in 45.68. Okay, yeah, and so it's a lower high. So a higher low and a lower high means a contraction in volatility. I think the trend, the trend is still down. I titled the video today, "Risk Ranges and the Trend." And so the way I'm seeing things and the way that things are being explained to me by hedge fund consultancy firm that I hire for helping me maintain a portfolio and trade, is saying that things are generally bearish. And so what I think that we're looking here is the forecast is that right in here for the short term, volatility is going to come back in after a pretty large spike yesterday in volatility. They're expecting it to kind of come back down a little bit again today. Obviously, which is it's doing right now. It's coming back in just a tad. I mean, I could be wrong, and it could keep flying up, which is very possible also. But that we're probably looking, at least for the short term, for some range-bound type of motion. Actually, while I'm here, let me adjust the risk ranges on the VIX. It's a little bit out of order, but it's okay. So 20.03, or actually for the high end, I'll do the high end first. 30.64. So there's a little bit of a higher high, just a tiny bit of a higher high for the VIX. And for the bottom end of the risk range, that's definitely a higher low from the previous day, at least. So yeah, volatility is forecast to remain somewhat high for the foreseeable future. Foreseeable meaning what can be forecast, I suppose. So let's go back to risk ranges here. Okay, then we have the EMA and the S&P. All right. So let me put the Fibonacci back up on this one. So the next spot looks to me like 44 or 4,450 is the next spot for the S&P to test. What happened? I don't know when that'll happen. But generally speaking, entering into trades to the downside are going to have a higher probability of turning out as a good trade than trades to the upside. The new trend is in, and it's to the downside. Could last 2 months, 3 months, who knows? Could last 2 weeks. Who knows? Things change really quickly. All right, so then we have the Nasdaq. I don't remember where that line on the Nasdaq came from. But anyway, let's see the risk range on the Nasdaq here. Scroll back up to it. 14,571. 14,571. Jeez, that is a lower high on the Nasdaq, and then 13,741. 13,741 for a low. So the Nasdaq tech is going to get wrecked. All right, Russell, low end 1951, and the high end is 2081. And what usually happens is that after something bounces off of the high end, it goes and explores. It goes to explore the low end, and vice versa. So it's not perfect, but it's a decent. It's close enough to be able to make money. All right, and now here we have the dollar. The dollar's bullish. 94.99. 94.99. And let's see, 90. Where's the dollar? There it goes. 96.97. 96.97. Yeah, that's a lower high. What I'm seeing here, at least for the short term, let's say the next 3 to 5 trading days, it's expected the volatility is going to come back in again. So it might be pretty slow trading here over the next few days. Okay, so let's see the high end on gold, 1849. It's a higher high, and then the low end, let's see if the low end moves up to 1785. All right, good. Yeah, okay. All right, so yep, gold is panning out. I entered into a position down here on gold. And then it went up and it started coming back down again, and so I sold it. I only made a little bit of money. I was only a little bit above break even by the time I sold it. But unfortunately, I wish I'd held on to it. It was a nice little run there in gold. Then oil, I really don't care about oil. I don't really trade oil that much, which I guess is kind of kind of too bad for me, But it just, I don't know. I haven't really been paying much attention to it. All right, and so then, let's see, copper. That's interesting. So somebody is bullish copper. Let me see what copper's doing here real quick. Just gonna hit save on that. Let's see, range plays. We'll go to daily. Copper. Pull it up right here. So Hedgeye is bullish copper, and I'm bearish copper. That's interesting. It's not often that I disagree. I usually keep a pretty close eye on what Hedgeye is forecasting. They're good. Hedgeye is good at what it does. So the way I was seeing it here is, here's the gap on copper right? So we had this island gap up here. An island gap, it's really interesting. You know, this island, this is really bearish. It's a really bearish formation. Gaps up, has an island, gaps back down again, and then gives up, you know, quite a bit in price. So the way I was looking at it is, this thing back on, that here on this day, in fact, that's yesterday, I started buying puts on copper right here. It went up to the top. It went up to the gap and failed and was rejected, significantly rejected. So I started buying puts on copper. Actually, I started buying puts on copper back here on the 9th for the anticipation that it would hit the high end here and keep going down. Copper is referred to as Dr. Copper. And the reason that it's referred to Dr. Copper is it tends to forecast, you know, the rising prices in copper tends to forecast an increase in economic activity. And it's really strange. I think it's strange that Hedgeye is bullish on copper because they are bearish on almost every other part of the economy and on the move in commodities. You know, the dollar is strengthening. They're bullish on the dollar. Let's go back to the risk ranges. You know, so they're bullish on the 10-year yield. They're bullish on. They're bearish on the broader market, the S&P, the Nasdaq, the Russell. They're bullish on the dollar, which puts pressure on commodities. Bearish natural gas, bullish gold for the short term. I think they were even bearish. They're bullish on oil now. They were bearish on it. You know, and so it's interesting, you know, that they suddenly switch up. But so yeah, I'm bearish on copper, and it's going to open up this morning. It looks to me like it's opening up down. Let's see, I put it in metals, I think. Yeah, there it is. So it's going to open up down 1.95%, which is nice because this is significantly lower than where I had purchased my options on copper. So okay, let's see. Today ought to be a pretty interesting day. There are some things hitting my scanner that are actually interesting. So let's see. Let's go back over here to the daily. I'm gonna take EM off the daily, Qs, so on. Let's go to Zillow. Oh, okay, Zillow. Interesting. They must have reported earnings recently. Yeah, they did. Oh, they had a great earnings. Wow, look at that. Outstanding earnings. Look at that. So, surprise of 50 cents per share, which is a 55% beat. And on revenues, an $873 million upside surprise on revenues. That is amazing. This chart doesn't look very amazing, though. Look at that. Up to $200 a share. Now it's back down here. Let's do this. Let's go from here down to here. See the kind of Fibonacci levels play out. Not much. Not much going on there. And I'm not really interested with this is bearish, obviously, right? Came up here, went parabolic, and now is selling off, and it is sold off from its peak. Let's see here. This is terrible. I feel bad for anybody who bought Zillow at 200, and somebody did, the all-time high right here at the high of $208.11. And actually, look at that top right there. Talk about a top. Look at that topping candle, big time. All right, well, so let's see here. Let's go over to the gap on the day. Let's see. All right. So here's the gap, right? there to its close right there. So the idea here is, to buy it after it crosses down below the 75 or past its open or what have you. I guess, I'll put it up. I might trade it today, so I'll have it on watch. So basically, it's the strategy I use is, if it opens up, goes down below but doesn't hit the 75 level, and then pops back through its opening price, then there's a trade. I buy right there. If it drops down below the 75 and then comes back up again, but doesn't touch the 61.8, then I buy at the 75. And then sometimes I'll average in between the 61.8 and the 50. But everything's so bearish right now that I'm not really comfortable establishing a long position in anything, or for even a trade. But I'll keep an eye on it. All right, everybody. I think that's going to pretty much be my pre-market strategy session there. Let me see here real quick. Risk range plays. Still, the Nasdaq is still way above its risk range level here. So I will be looking for opportunities to enter into the Nasdaq on the short side. And with my dailies, as Tesla right now, Tesla and Amazon are pretty much they're kind of like staples in my daily trading, and they're tech. And so I'm going to be looking for opportunities to short Tesla and Amazon with the way tech is selling off. And today may not be the day, though. There was yesterday was a fairly eventful day. Let's look at that on the daily chart there. Let's get some of this stuff out of the way. That's a reversal day. Almost a perfect reversal. That's as close to a reversal. If it had gone up and broken above this level right here, and then come back down, then that would have been a tremendous reversal. But as it stands, reversal day, definitely bearish. So I will be looking for opportunities to go bearish, go short. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday morning's strategy session. I am out.